Hello guys, welcome back to another lovely trading video. In this one we're going to be doing some in-depth stock analysis on Logitech, ticker LOGI. Reason for this is they do have their earnings after hours today. So it makes sense to be doing analysis on this because this is probably one of the bigger ones that people are looking at least on Monday's earnings. So we can currently see as of now it closed around $54 and after hours has had not too much movement, but that's just because this stock isn't one that has massive volumes, and that's why you're checking the intraday charts. They are quite choppy. But anyway, to get into the more important side of the charts, the 4 hour and the daily, so we can start seeing where our standard deviation levels are, which will be our strong support and resistance levels. So we can see currently we are sitting basically on the statistical mean on the 4 hour and the daily. And what this really does tell us is going into earnings, we have no bias. Most of the time we don't anyway, but really right now it is wait until a move happens before we look to make a trade. And by that I mean, yeah, going into earnings we probably do not want to be holding this stock because it doesn't make sense for it, at least on a technical standpoint, to go up or down. So really we would instead be waiting for a push down to either $43 and $35 to the downside, and then we would start being a bit more long biased. And likewise, if it can go up to around the $64 and $68 marks, then that would also push us towards a bias, and then we would start being a bit more short bias on this stock. So really with Logitech we would be looking for a move to either down or up to $64 or down to $43. If it can't make this move, again it's going to be something we really probably not looking to trade, at least for the time being, because it's too close to a statistical mean, and when you're close to a statistical mean there is no really no direction the stock really should move. It's just going to be more of a fundamental basis, so unless you're trading from fundamental knowledge it's probably better to stay away. But now we can give targets if it does move quite heavily off earnings after hours. Then where will our targets be? So to the downside, if earnings are poor, we end up pushing down towards $43 would be our first kind of buy zone, with $35 or $36 being that next buy zone. Then pushing even further down around $32.75 and around $19.89 and $22. These are all going to be key buy levels to the downside because these are coming into the second and third deviations. And then at an extreme, which you know is not really going to happen, is around $4. And then we do have one at 11.30. But really, yeah, the key ones to be paying attention to is really not trading the stock until it comes down to either the $43 or $35 or $36. The reason we say that is at $43 then we can see the stock going up a bit, but if you really want, you know, a high probability trade, we would really wait till that $36 or $33. The reason for that is coming into the $33, then we are coming into the second deviation, and stocks don't tend to push too much past their second deviation. So if they do come down to here, that's usually why we create a bias in the opposite direction. And then going down to the $22, that is really a key level because that is going to be the third deviation on the 4 hour as well. And you don't ever really see stocks down at the third deviations, and if they do, they tend to change direction quite quickly. Now, the same thing to the upside. If Logitech ends up moving up on earnings, then obviously 64 and 68, they're levels we would wait for at a minimum before we look to trade it short. Or if you're looking to lock in profits, again these will be levels where you do that. But really the key ones we're looking at is going to be $75 and $83 and $86, because these are the second deviations. And again, same thing, second and third deviations are a lot more important than the first, because a lot of the stocks can break out the first deviations because only 68% of the data will trade within it. But going into the second deviation, 95% of the data trades within the second deviation, so really we don't expect it to go too much past that second deviation when it comes into those levels. And then at an extreme, kind of our final level would be that $100, because that is the third deviation on the daily. Now this level is also key to note, because if it did push up to here, that would also be a strong psychological level. So really we wouldn't really expect it to break out of here, and even if it did, then we would look to kind of trade it long, wait for the trace back to it, or you know, retest of 100, and then you could maybe look to trade a bit of a breakout. But again, these are just levels where we expect strong movements to happen, so whether you're a long or short bias trader, they're levels for you. And again, even let's say they're coming into the $68 level, you can still trade that in a long bias manner. If you just want to use these levels as support, you can. So by that we mean, you break up to say $70, you come back, retest to 68, and if it holds that level, then it's most likely going to push on to that next deviation, which in this case would be around 75.50. So that's really how you can use these levels, and the levels that we're personally looking at on Logitech coming into earnings this evening. So I hope you enjoyed the video. If you did, don't forget to drop a like and subscribe. I hope to see you next one, and that's it. Peace.
And maybe I'm crazy.